Good morning and welcome to Charting the Markets on Friday the 16th of June 2023. Equity markets continue to rally higher to multi-month or even multi-year highs as the European Central Bank hiked its rates by 25 basis points, as was widely expected, to 3.5%. And despite Christine Lagarde in the press conference yesterday saying that basically the ECB is leaving the door open for further rate hikes to be seen. So short term, that led to a blip in the equity performance in Europe, but then the markets headed back up again. And you can see that also on the daily FTSE 100 chart, and here on the daily financial bet, you can see that yesterday we ended up the day on a positive footing and then followed through to the upside earlier this morning, but failed just below the April to June downtrend line, which comes in at 7,700, and are basically now trading back towards yesterday's highs, back at that key resistance area I've been mentioning for the last week or so, between 7,655 and 7,679, the mid-May low and the highs seen since late May. So we've got this resistance area which was being tested earlier this morning. We went up to 7,688, but then, as I said, we failed, and now we seem to be coming back off again. So from a medium-term perspective, we don't yet know what the pattern here will look like. Is it going to be just an elliott wave ABC correction, in which case we could see actually a fall through the May low at 7,433 take place over the coming weeks and month and take us back down again towards the March low at 7,204? Or is this the beginning of a third wave to the upside, so the beginning of a new up move in the FTSE 100? And in that case, what we should see next week is actually this downtrend line being broken through, and ideally also us closing on a daily chart closing basis above this key resistance area, so above the 7,679 mark. And once that is the case, we could then retest the mid-May high at 7,806, and that needs to be taken out for the bulls to really be back in control. So we haven't seen that yet. But if we go to European markets, what we can see here is the DAX 40. As I said, despite this rate hike and despite, more importantly, the European Central Bank leaving the door open for perhaps another 2 rate hikes to be seen this year, the DAX 40 this morning briefly shot up to a new all-time record high at 16,361. So just marginally above yesterday's high, and also the May high at 16,333. So you can see here yesterday that blip lower that we had when the rate announcement was made by the European Central Bank, and then this hammer formation here being followed by further upside short term. But we are now struggling a bit, so we'll have to see whether after basically 4 consecutive days of higher prices, the DAX 40 can end the week on a 5th positive footing here. But either way, I mean, it doesn't really matter, because unless it were to take out Monday's low at 15,971, which is extremely unlikely, we will end up once again on a positive note here for this week, and do so very close to all-time record highs, which is a bullish phenomenon. And basically, from a technical perspective, we will remain bullish provided we stay short-term above yesterday's low at 16,160. So the short-term trend will be valid as long as that holds, and medium-term as long as we stay basically above this key support area between the May and June lows, between 15,659 and 25. As long as that holds, further upside is in store for the DAX 40 from a medium-term perspective as well. The S&P 500 has risen even more. I mean, on Wednesday, we had the Fed basically skip its June meeting. And even though it did say that it could not only hike its rates in July, but maybe also later on in the year, the financial markets interpreted this as if the Fed is actually ending its hiking cycle. And that has led to a lot of risk on. And you can see here, we've now seen 6 consecutive days of higher prices, and we are accelerating higher with regards to the upside momentum here being seen for the S&P 500. It now trading at 4,440 on this daily financial bet at levels last traded back in April of 2022. And if further upside were to be seen in the days and weeks ahead, we would then aim for the February 2022 high at 4,591 and also the March 2022 high at 4,637. So these are the next upside targets. And we can see here that the S&P 500 is now on track for its fifth consecutive week of gains. And we'll have to see whether at a time where we see the CNN greed and fear index edging ever more into the extreme greed area, and that often acting as a contrary indicator at a time where the CBOE, the Chicago Board of Options Exchange, is also the put call ratio at extreme lows, again a contrarian indicator, and where the VIX, the volatility index, is also trading at very low levels, whether in such an environment we might actually be having a little bit too much confidence, and there might be a little bit of too much over exuberance in this market, which could perhaps in the days and weeks ahead lead to a unexpected reversal to the downside. But right now, despite the market being complacent, further upside is sharply and rapidly taking us higher with regards to equity markets. Yesterday's European Central Bank rate hike by another 25 basis points to 3.5%, and the Fed not having hiked its rates on Wednesday of this week, despite saying that it will continue to do so probably in the coming months, depending on the data and on underlying inflation, with both the European Central Bank and the Fed, of course, looking at core inflation and trying to bring that back down towards their 2% targets. We saw the US dollar actually come off very drastically overnight, especially yesterday also. And this had to do with the fact that market participants expected the Fed to perhaps no longer hike its rates, despite it saying that it might continue to do so. And that has led to the euro dollar surging higher, as we can see here on the daily financial bet, very rapidly yesterday, and taking us back up to a 1-month high and very close to the early April high at 109.73. So far, we've risen to 109.62, and you can see not much trading is going on as investors are perhaps taking some money off the table ahead of the weekend. And after we've seen this very nice acceleration to the upside and its fourth consecutive day of gains for euro dollar on that interpretation of what the US Fed is going to do going forward by the financial markets. So the financial markets basically expecting the Fed to perhaps already having hit its pivot now, even though the Fed does say in its rhetoric that it may have to continue to hike rates further. So technically speaking here, once we were to rise above 109.73, we would have the psychological 110 area in our focus, and probably will range trade once again, as we did for much of April and early May, in that zone, and remain below the May highs, the April highs between 110.75 and 110.95. And support, in case of a short-term reversal to the downside being seen, would now come in around the mid-April low at 109.09, so that could be a potential support level short-term. But as you can see here, euro dollar very much in control of the bulls at the moment, with further upside to be expected. Now, with regards to the Bank of Japan, which earlier this morning kept its short-term interest rates at an unchanged minus 0.1%, and also that of the 10-year bond yield around 0%, that has led to the euro versus the Japanese yen accelerating to the upside. We've now seen 5 consecutive days of higher prices for euro yen on that interest rate differential, with the European Central Banks not just hiking its rates to 3.5%, the 8th consecutive rate hike we've seen so far in this hiking cycle, but also leaving the door open for another potential 2 rate hikes. And that has led to the euro appreciating versus the Japanese yen. And as you can see here on the weekly chart, we are now Actually, I need to go all the way to a monthly chart to show you that we are now trading at levels last seen back in September of 2008. And we are actually accelerating to the upside with regards to this currency pair, and don't have any resistance to speak of until we get to the February 2007 high at 159.65. So that would be the next medium-term upside target for euro yen. Short-term, we've got psychological resistance at 155 yen, but as you can see here, we are really heading higher, and this is likely to continue as we've just broken out of this triangle formation, continuation triangle in this case, and basically the only support to speak of is the early May high at 151 yen and 61 cents. So further upside in store for euro yen on that interest rate differential, and the story is quite similar for dollar yen, with the US dollar having depreciated quite rapidly. Yesterday we saw this potentially bullish formation, but bearish formation here form on the candlestick. But what we can see today is that we are just regaining these losses we made yesterday intraday and are trying to head back up again towards the multi-month high at 141.50. And if I go on to the weekly chart, we can see that we are now here heading towards the November 2022 high, the late November 2022 high at 142 yen and 25 cents. So that will be the next upside target for us as dollar yen seems to continue to appreciate, with the view that the Fed may continue to hike its rates at the July meeting and perhaps beyond there, whereas the Japanese central bank is sticking to its ultra-loose monetary policy. The weaker US dollar has helped commodities rally, and we can see this with regards to the price of crude oil and gold as well. And here WTI, you can see that we bounced off the late May low earlier in the week on Monday at $67.54, and now heading back up towards the April to June downtrend line, which today can be seen around, let me just get the exact level here, $71.76 on this daily financial bet. And we'll have to see whether once again that resistance line will cap and further downside be seen, or whether this time around we can actually break through it and head back up again towards our upper boundary of this 6-week sideways trading range, which has been seen between $74.70 and basically the $67 area. So we've got some pretty good resistance here between the mid-May highs and the June highs between $73.82 and $74.70. So that's what we're gunning for at the moment. But in order to reach that resistance area, we need to break through this April to June downtrend line, and perhaps it will happen next week. So we'll have to see whether this will be the case or not. Moving on to the price of gold. Gold has slid over the last few weeks, as you can see here, and dripped down to $1,925 per troy ounce, a level last traded back in March, mid-March of this year, before reversing on that weaker US dollar and now breaking through this May to June downtrend line, with the 9th of June high at $1,973 being our next upside target. And this would need to be exceeded for us to retest the early June high at $1,983. So these are the upside targets short term for the price of gold, with further upside likely to be seen over the coming days. And last but not least, I'd like to draw your attention to natural gas, because we can see here that the price of natural gas, natural gas has actually risen once again, and very sharply, on reports that the Netherlands would close a large gas field. And here we're heading back up again towards the March to June downtrend line, which can be seen at $2.69. And that is the next upside target for the natural gas price here. And it is likely that we will hit that level. And above there, we've got the May high at $2.78, which would be the next upside target. And we'll have to see whether once again the downtrend line caps, and whether we then stall and come off again, as was the case back in May, or whether we can this time around have further upside take us towards the psychological $3 mark with regards to this chart. So interesting week ahead for natural gas next week. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.